Hi everybody, this is Thomas Wynn with the 2026 second quarter market summary. Here's all our contact info, so reach out anytime if you have questions or comments. On the screen now is a view of the S&P 500 for the last 12 months. We saw in the first quarter a decline due to the Iran war, then a big rally and recovery as hostilities ceased to some degree. And now, since hostilities have started up again, we see sideways to down so far in the third quarter. On the screen now is the second quarter performance. Very, very strong performance across all asset classes. Take a look at the performance in equities versus the averages. Very, very strong quarter for equities as well as bonds. Now let's look at longer term performance. This chart shows annualized returns from 1 to 15 years. And again, every arrow is up. We are in the midst of a very, very long bull market, starting in 2009 and going all the way to the present. And I've made a note here, similar to or contrasting to the 10-year returns that are all positive and extremely, extremely strong. At 2009 bottom, the bear market from 2000 to 2009 had annual negative returns of 8.72. So that's the last time we had an extended bear market. This slide shows the world stock market performance for the quarter with the headlines that came out during the quarter. It's a mix of mostly good news and higher stock prices with a few negative headlines regarding interest rates, which were rising during the quarter. On this slide, we're looking at global stock prices with headlines during the last 12 months. Again, a mix of good and bad news, but mostly good. The beginning of the Iran war on 2/28 drove prices over $100 a barrel and led to a decline, but the subsequent ceasefire propelled stocks back up to new highs by the end of the period. Now let's look at stock prices for the U.S. You'll notice on the chart that small growth, small cap, and small value led. Everything had double-digit returns, but small led growth. And if you notice in the grid down here, over the recent months, and at least for 1 year, small growth, small cap, and small value have outpaced and outperformed large growth and large value. It's been the opposite for the last 10 years or so. Growth has obviously, the large tech stocks have led the market, but it seems to be turning right now. The U.S. in general led, with foreign trailing, and now foreign is beating the U.S. over this last 2 years. We're now looking at developed international stocks, which had strong performance across all asset classes, with growth leading the way over value stocks. The best performing category for the quarter was emerging markets, with over 20% returns in 4 out of 5 categories. Let's notice that for the 1 year, annualized returns for this category have 40% annualized returns or 1 year returns for 4 out of 5 categories. And it's a reminder of how important it is to be globally diversified. This has been the trend. Emerging markets have been the leader for the last 2 years. We're now looking at returns by country, with the U.S. just about the global average, with most countries with positive returns in the quarter. Now let's take a look at commodities. Always volatile, but now even more so lately due to the Iran war affecting the price of oil, which typically inflates the price of almost everything else. Energy and precious metals were the big losers. I'm usually pointing out that how volatile commodities have been. Negative returns for the quarter. In the near term, up to year to date and 10 years, positive returns, really strong 1 year returns. But over the long term, inflation hasn't affected commodities that much, and a bet on commodities over the long term has had basically zero returns. This final slide is DFA's editorial comment, which is on message and on brand. If you invest in a diversified portfolio for the long run, you'll be rewarded. If you try to stock pick or market time, you'll likely have poor performance. Okay, that is it for the second quarter market summary. And I hope you find the information helpful. And if you have any questions or comments, get in touch anytime. Alrighty, bye-bye.